When we acquired our flagship property, gold was at $1,800. And when we listened to people like Brian and everybody out there singing the song that gold is going higher, well, we paid attention. So we used them to our advantage to make strategic decisions. So thank you. We have 2 advanced stage projects in the Southern Abitibi, one of the more prolific gold belts in the world, probably number 2 in the world for amount of production. Over 200 million ounces have been produced in this district. I have some forward-looking statements, but I'll cut to the chase. What are you actually buying when you buy Emperor Metals? What we have is 2 advanced stage projects. The one on the left is our flagship. It's Duquesne West. We have 1.4 million ounces of gold that was a maiden mineral resource that we just put out in July of 2025. We increased it from basically 727,000 ounces to 1.4 in 2 years. The one on the right is the near-term production story. It has a historical feasibility study. It has bulk sampling, average grade about 4 grams per ton. About $70 to $80 million has been spent on that project because we have 3.3 kilometers of underground development. There's a resource of 237,000 ounces of gold. We think we can double that quite quickly. We have a mining permit in place of 1,000 tons per day, which would equate to about 40,000 ounces of gold per year. So that's significant because $5,000 gold and 40,000 ounces per year, that's $200 million of revenue, an easy 10-year mine life. So pretty exciting about that one too, because we're on a path to self-funding. All for the low price for both these projects of $37 million market cap. So it might be your last time, as Brian said, to get in on something like this. We have like 19 cents is our stock price right now. So I'll go into the little bit of details on our flagship. Right now we're in the middle of a 15,000 meter drilling program. Last time we drilled about 17,000 meters in combined 2023, 2024, and we doubled our size of our deposit from 700 to 1.46 million ounces. So yeah, we're also sampling 8,000 meters of historical cores. That's 23,000 meters of additional assays put into our model to grow this deposit. Pretty excited about that. Our second asset is Lac Pelletier. Right now, we are in the process of moving forward with an additional pre-feasibility study so we can get this into the investors' minds to show them the value of this company because it was halted, this deposit, in 2010, and we're picking up the torch like 15 years later. So a lot of the historical work that's been done on it with the feasibility studies is outdated because they're using like $900 gold. So this is where we're located. Arguably, like I said, one of the best jurisdictions in the world for gold. 200 million ounces has been produced. What we liked about this and our corporate vision was we wanted to pick up deposits in the Southern Abitibi. This is when gold was at $1,800 because we saw stories out there where people would go into mining and they'd have overrun on CapEx costs and it would sink the company, they'd go bankrupt. And so we could prevent that by picking up assets in this tier 1 district because we could use anything we have or discover. We could use it as basically a satellite deposit for supplemental feed to existing infrastructure in the area. Within 40 minutes of both of these projects, there's 6 different mills, and they're all under capacity. So a huge opportunity. We wouldn't have the $500 million or $1 billion construct to build these projects because we could use the existing infrastructure. So that's a huge win. It just makes a better rate of return and a healthy NPV and quick payback period. So this was the corporate mandate. More importantly, at Duquesne West, out to the north, between us, First Mining, and Stellar, there's 20 million undeveloped ounces along that segment. And Agnico Eagle owns the Holt Holloway mine and complex, and they have a mill and they have a tailings dam. So if you do some forward-looking visionary thinking, that's a good opportunity for somebody to get in there for consolidation as well. So what I'm outlining, we have potential for significant resource growth, expansion. We have high-grade zones, which we'll talk about, and the mining potential is here. So what we did before we picked up these deposits, we fully evaluated them using AI. I got a lot of my experience when I was chief geologist up at Detour Lake Gold. We did that for Detour Lake Gold. We improved the operation significantly by adding additional 20% more gold going through the mill with some of the models we created, what I call the foundational models of using AI in the industry. So we use that technology to pick up both of these assets. And this is just an example of what our initial look at what Duquesne West looked like. This is when it was viewed as an underground opportunity, but we quickly conceptualized that it could be an open pit opportunity. This is just a geological model that was created within a month. So we're doing this work within a month or two quite quickly. This, in the heart of the deposit, this is what the thickness and grades of some of the stopes would look like. You look at 15 meters of 15 grams per ton. Other areas, you're looking at like 13 meters of almost 20. 13 grams per ton of almost 20 meters. It's huge. So we really like that because that's quick payback period type material. And these are just examples that this is not a pinch and swell quartz vein. We have substantial thickness. I don't expect anybody here to be a geologist, but it's showing that, good thickness, good grade, easy to mine. Miners love this stuff. They don't have to worry about losing the quartz vein. And also the slide shows how we, in the host rock that no one ever sampled before, we have gold with the bottom right is 25 meters of 1.69. So our plan is to sample all the stuff that previous historical workers have never done to add those incremental ounces into the open pit and keep growing this resource. That's an example of on the right of the core that was left behind. This is the core that's left behind. So we're sampling all this. This is how we keep adding those incremental ounces, lowering the strip ratio, improving the economics of this deposit. Very, very exciting. Here's an example of that pit, how it's growing. Here's the expansion possibilities. We're currently expanding to the west. We want to grow this another kilometer to the east, And right now we have about 1.8 kilometers in the main pit down to 400 meters depth. It's about 800 meters wide. So pretty exciting there. What I'd encourage people to look at is within the open pit, one of our last drill holes that we did in our last program, we had 21.7 meters of 35.2 grams per ton in the open pit environment. That's pretty good. Pretty exciting, and we're having large intercepts. You saw our latest press release in the open pit where no one sampled. We have 107.7 meters of 0.5 grams per ton. So we're constantly adding these incremental ounces that surround these high-grade gold lenses that poke their way through the open pit. And then when we go at depth, we're trying to get this, I think the pit's at a 0.4 cutoff, it's like 1.5 grams per ton. We think we can get it to 2 grams per ton to open pit, and underground be 4 to 5 grams per ton. These are just examples of some of our hits over the last 2 years. That's just sensitivity studies. You can choose your own cutoff grade, like the gentleman from EPIC has mentioned. People like to use 0.4, but for an open pit, but you could probably go down as 0.25 or even lower. Same with underground. I used a 2. This is a $1,800 gold. People are still stuck in that convention. We need to reevaluate as an industry when we look at these things. And there's Lac Peltier. Like I said, 3.3 kilometers. It took about $70 million to $80 million to do that. We're a market cap at 37. So this project alone, I could probably sell this project for $50 million, and I still got $1.5 million on the other project. Great opportunity at these prices. Don't hesitate. We're right next to Nico on the west. They have 3 million ounces, and they're not giving up that property, I asked. So we're building. They're going underground. They're going to use their deposit as a satellite deposit for supplemental feed in the. That's their plan too, in the district, and lots of opportunity with this one too. No one's drilled below 300 meters. So, and Last slide, probably the most important. You look at like Amex and Newfound Gold, when they came out with their resources, they drilled 600, 700,000 meters. We're only at 15% of that, but we want to drill 700,000 meters because that's our growth potential. We have only 100,000 meters drilled on both of those properties, between them, 200 between them both, but 100,000 meters on each. And we're a $37 million market cap. Our analogs are 342, 620, and 1.2 billion. So obviously this is the value proposition that I'm putting forth for you guys today. We didn't have our run, as Brian said earlier, and so we're hoping this is it. About the team, if you want more information, come to the booth. I'll be happy to talk to any one of you. I'm out of time, so thank you very much.